Let's welcome in our guest. We have Pankaj Murarka. He's market expert joining us now. Thanks so much for joining us, Pankaj. Where do you think the market is headed, and what do you think is going to do well from here on? Everybody says it's going to be more stock specific from here on, but what's the right strategy when it comes to investing in the right stocks?
I think the outlook for market remains fairly sanguine from here on. Essentially, to put things in context, if you see, index has not gone anywhere over the last 18 months or so, and at the same time, we've seen some uptick in the growth in the economy, though it did get impacted by the recent demonetization and its after effect. But now we are well through, overcoming that. So I think. To put things in context, over the last 3 years, we have seen significant improvement in India's macroeconomic balances. India probably has one of the strongest macroeconomic, fundamentals across, if you look at countries across the globe. And with improving growth outlook globally, I think India should be a big beneficiary of uplift in global growth. And at the same time, the pointers to growth domestically are also equally strong. So I think we should see a sharp recovery in the economy going into the next financial year and the year after, and that should bode well for equities, which essentially is a growth asset class.
Right. So you think the market's outlook is good. From here on, what will be the positive trigger for stocks and for markets? Because we've seen the budget done and dusted with. The RBI's policy was one where the stance was changed from accommodative to neutral. Where are the positive triggers coming in? Do you think the GST is going to provide the next trigger? The expectation is that it's going to be more disruptive in the post its initiation for a few quarters. So where is the positive trigger coming from?
I think there are lots of them around the corner. First and foremost is the fact that our growth is at such a low point from an overall economy point of view that we'll see an uptick in growth, and growth is the biggest trigger for a growth asset like equity. So economic growth is going to be the first and the foremost trigger. Secondly, more importantly, I think despite RBI setting a pause on the rates, I think the rates are now at at such a low point that it's a huge significant trigger for equities as an asset class in terms of relative valuations versus fixed income. And you touched upon GST. I think, that's going to be a very big driver for growth going forward, though it might lead to some disruptions for the first few quarters. But I think we should put things in context. This is one of those reforms which has been in the making for the last 10 years. So finally, when it comes, I think markets are not going to look at the next few quarters in terms of the disruption it causes, but the benefit that will accrue to the economy as a whole, to the government and to the corporate sector, probably over the medium term, and that can be very significant. GST by itself can add about a percentage point to overall aggregate GDP growth over the medium term. And once you get through those initial disruption period, then the benefits of it over the next 3 to 5 years can be very significant. So I think all of them points towards probably a brighter outlook for equities as an asset class. Also, please bear in mind that corporate profitability today is at the lowest point it has ever been in the cycle. Corporate profits are about 4.5% of aggregate GDP, which is clearly the lowest that we've ever seen in the economy. So whenever we see an uptick or recovery in the growth in the economy, we'll see a significant uptick in corporate profitability, and that coupled with reasonable valuations and lower interest rates should be a strong driver for equities as an asset class going forward.
How much importance would you give to flows and sentiment? Now, domestic flows have been strong for the last few months when FII buying has been very muted. How important are flows? Because, a lot of focus now on developed markets like the US. We've heard Donald Trump say that he's going to come up with tax reforms. Do you think that flows will remain muted in India? Can domestic flows, help support the market?
Well, I think domestic flows will continue to remain strong because probably equities is the best opportunity for domestic savings. Fixed income, because of the decline in interest rates sharply, is not attractive as an asset class anymore, and clearly real estate is one sector which used to absorb a lot of domestic savings, has clearly not delivered any meaningful returns over the last couple of years, and the outlook isn't good either. So I think an equity as an asset class, apart from the liquidity factor, is probably one which will give superior returns to any other competing asset class, and that should be. And the fact remains that the penetration of equities amongst household savings is significantly low. So domestic flows into equities will continue to remain strong. But at the same time, I also believe that FII flows into Indian equities will also continue to remain strong. While we'll see a growth recovery in US, but I don't think so that will change the course of flows into a country like India, because foreigners investing into India are taking a more strategic view of India, which is more like 5-year, 10-year, and they clearly think that India is one of the very few large economies which can grow at a very high rate on a sustainable basis over a long period of time. So India presents a very compelling investment case from a global investor's point of view, and for a emerging market or an Asian market investor, it's one of those investment case which they can't afford to ignore.
All right. How important will the upcoming state elections be for sentiment? Because the markets have run ahead pretty fast. Do you think there are risks because of the state elections? Growth could be good, but for talking about stock markets that have run up so much, would you exercise some caution?
Yeah, see, sentiments are very fickle. They like the weather, they change every day. So some of these election results and nuances can have an impact for a couple of days or a week or so, or over the next 5% move on the markets. But I think what matters for a long-term investor is more the medium-term and the longer-term outlook. So if at all there is any pullback or correction in the markets, either because of some election outcome or maybe because of the fact that over the last 6 weeks markets have risen pretty sharply, and a lot of people have been left on the sidelines, I think long-term investors should use any of those corrections as an opportunity to step into the market or to invest into the market. So I think any correction into Indian equities is an opportunity to invest into it from a medium-term to longer-term view.
Right. Say if there's a correction in the market of about 4-5%, maybe, over the next 2 to 3 months, then if you start to look at the 10-year GSEC yields in India, and then you start to compare the earnings growth, you think earnings growth by far will look better?
I would think so. So over the last, 6 years, because of the multiple headwinds that we have faced, earnings growth have been in low single digits. And in fact, over the last 4 years, they've actually lagged even the nominal GDP growth. That essentially shows the compression in earnings that we've seen in the corporate India because of the multiple headwinds that the corporate India has been facing. But now I think we are at a stage where most of the headwinds are behind us, and as we see recovery in the growth in the economy, earnings will accelerate at a much faster pace than the nominal GDP growth, and that by itself should be a significant driver for equities performance.
Right. Let's talk about some stocks and sectors, Pankaj. So, pharma and IT are two sectors which have done very well in the last few years. Earnings growth on a YOY basis has been good. But the stocks have not performed, at least in the last 18 months. Do you think now the earnings growth would start to come back, and that's the time when these names could be contra buys?
Well, I think, both the sectors are more globally linked than domestically linked, because a large part of their earnings comes from global markets essentially, and India has created some of the finest global companies in these sectors. But when you look at both the sectors, let's say in case of IT sector, the challenge, they certainly face some cyclical headwinds to their business. One, clearly there's a significant disruption that's happening in the IT spends itself, because client spends are more directed towards digital technologies, and as this shift in technology is undergoing, the Indian companies are facing significant disruption in the existing business in terms of the way the pricing in their business works. The pricing on the existing business is on a significant downward trajectory, and I think that will continue for probably the next couple of years. shift in technology happens in the IT sector every decade, and this time around the point is that Indian companies for the first time are the incumbents, as opposed to the IBMs and the Accentures of the world. So clearly they have certain cyclical headwinds going forward, and plus on top of that you have some rhetoric from the new government in terms of in US in terms of what it wants to do in terms of restrictions on immigrations and so on and so forth. So I think we need to watch out for that. So while they are great companies with superior business models, and I'm sure they will do well over a longer period of time, but I think from a next 2 to 4 quarters they might still have cyclical headwinds to their earnings, and the earnings growth will be muted.
Right, and as far as valuations are concerned, does that already factor a very muted growth?
Oh yeah, I think valuations have corrected significantly, so that's already priced in, or to a significant extent that's priced in. But I think while immigration challenges will be more near term, and I think the companies are capable of dealing with it. What's more challenging for these companies is the disruption that's happening in the business. And clearly, again, I think Indian IT companies have shown time and again that whenever these kind of disruptions happen, they have demonstrated the ability to innovate and deal with it and emerge, out of it with their skill sets and investments into the new technologies. And I think they will demonstrate that this time as well, but it might take its own time.
Right, then let's just talk about pharma and the pricing pressure over there. You think valuations there are not factoring in? We still have Sun, Lupin, which are not delivering great set of numbers, but at the same time, the valuations are still high.
I think valuations have moderated significantly over the last 6 quarters or so. The fact remains that again there is significant price erosion that's happening in the base business or in the generics, US generics space. But having said that, I still think that if you take a medium-term outlook, then Indian companies are clearly moving up significantly up the value chain from generics to specialty generics and complex generics companies, and they have been making significant investments into their R&D pipeline and in terms of their filings. And I think as this transition happens and they move up the value chain, I think the longer-term outlook for these companies still remains very promising, though they again have some cyclical headwinds for the next few quarters in terms of their earnings.
Right. In pharma, are valuations factoring in the worst?
I see, it's very difficult to point at any point of time whether the valuations are factored in the worst and what the worst case scenario. But it's fair to say that valuations have moderated significantly, and they are far more reasonable in the context of the growth that these companies are expected to deliver over the next few years. So I don't see valuations as being too rich or expensive in that sense.
Right. Let's talk about corporate banking space. Now, till now, the retail banking space in the last 4 or 5 years has been a compounding story. But only retail cannot just grow. I mean, only consumption cannot grow. Even manufacturing has to grow, and only then, you would see more money into the retailers' hands. Do you think that corporate banks should do well? A lot has been announced for better bankruptcy codes, better reasoning to lend. So, do you think corporate banks will do very well once the debt issues are behind?
So clearly corporate banks have been impaired because of the issues which we've had with the various sectors of the economy, be it the entire infrastructure sector across different segments of infra. We've had significant challenges that companies have faced, and in turn all the problems today or challenges were lying on the balance sheet of corporate banks. A good part of that has been, or a significant part of that is known or disclosed now than what then was the case about 3 years back. But I think they still have a fair degree of provisioning to do, which will probably happen over the next 3-4 quarters. So I think the biggest challenge for the economy is that the private sector investment cycle remains elusive. We need, there are not enough corporates who are willing to invest into new capacities, and at the same time, corporate banks have been, do not have the balance sheet strength to probably lend to new projects. But I think over the next 2-3 quarters, as some of these challenges, are passed through, or we overcome that hump, then probably at least on the private sector side, I think the corporate banks would do well.
But do you think in terms of corporate banking valuation, so earlier it was the difference between PSU and private banks. Now it's the difference between corporate and retail banks. Do you think that difference has already played out? So the street is already giving retail banks a big premium?
Yeah, that's true, but I think that will always continue because on a retail business, if you look on a risk, the risk of the business is significantly lower, and the risk-adjusted returns for retail banks are far superior to the corporate banks, and the retail business is far less cyclical in that sense versus a corporate business. So I think retail banks will continue to enjoy that premium because of the superior risk and the superior risk-adjusted returns that emerge out of that business. So while the valuation gap could narrow somewhat, but I think that retail banks will always continue to trade at premium to corporates.
Right. Can you talk about NBFCs? Last 8 months, most of the NBFCs have re-rated. Any particular reason that you can see?
I think if you see over the last 4 or 5 years, they've done a phenomenal job, meaning all these NBFCs have a very strong distribution franchise. And they've done I think, exceedingly phenomenal job in terms of leveraging the distribution franchise and at the same time running a very efficient operation and at the same time managing the asset quality quite well. So I think they are a great distribution franchise, and as a result, the sum total, it delivers a very solid value to the stakeholders. So I think well-run NBFCs who have very efficient operations and who manage the asset quality well will continue to do well.
Right, Pankaj, the rupee has strengthened. It's now trading at a 3-month high. When we were closer to 68, everybody said look out for 70 rupees to a dollar, maybe even by March. Where do you think the currency is headed? And do you think if you look across to the US, the decline in the dollar is now over? If there is a fiscal stimulus coming through, we're already hearing talk about tax reform coming through. Do you think the rupee, this is as good as it gets for the rupee? It's going to weaken again from here on. What would you do with some of the export-oriented names that are listed?
Well, so I'm not a currency expert, but I'll give you my view. Clearly, the rupee is overvalued. If you look at it on a REER basis, clearly rupee is overvalued by 5 to 7%. The recent up move in the rupee over the last few days has also been, I think, triggered by the RBI policy action, where they've changed the monetary stance from monetary stance to neutral. So that's worked in favor of the currency. And clearly, meaning if you look at last year, while in the backdrop of the last 4 months, in the backdrop of a strengthening dollar, probably rupee has been one of the more amongst one of the best or the better performing currencies. So, and I think that's nothing but a reflection of the strong macroeconomic fundamentals that India has. But at the same point of time, I think it is about 7 to 8% overvalued when you look at it from a RER perspective. Some point of time, I think we'll have to let it go, because otherwise it will erode export competitiveness of Indian companies. But I still think if you take a slightly more medium-term view, then rupee probably will be amongst one of the more stable currencies as compared to a lot of other competing currencies or countries, because the strong and stable macroeconomic fundamentals that India has. I think as far as companies across sectors are concerned, be it IT or pharma or other exporters, they'll have to readjust or adjust their businesses to the prevailing currencies. And more importantly, I think it's good for those companies if we have a stable currency rather than a currency which is far more volatile, and then they find it difficult to deal with it. So a stable currency is far more, is what is required by businesses and corporates, and that's what the trend rupee has been demonstrating over the last couple of years, and I think it will continue to remain so.
Pankaj, what I wanted to find out from you is how would you view some of these export-oriented companies, that not necessarily just pharma and IT. IT has a large market in the US, but the business is changing. But we have some auto component makers that have a large presence in the US, auto companies that have sales in the US, some of the metal names also that have some interest in the US. So if that economy starts growing much faster, do you think prospects of these companies will improve? Would you look at buying some of these names?
When you look at from an investing perspective, while we do have certain companies across autos and some other sectors which are big exporters out of India, but there are very few companies who have done it well when it comes to global markets. And but I think if there's an uptick in global economy, certainly these companies will benefit, and one would like to look at them. But at the same time, I think we also need to be conscious of the fact in terms of there is an unknown variable out there in terms of the new government in place in US and what the new president wants to do in terms of dealing with all those all those exporters and trade deals, this thing. So I think one need to watch out for that in terms of what the new government in the US does, and what does that mean for, it's not an India specific issue, but I think it's a more issue to do with global trade. So how that impacts these companies.
Right. What's your view then on some of the pharma and pharma names? IT, the business is changing, but pharma has its own issues, and some of those issues may get exemplified out because of the policy in the US. There's talk of bidding for generic drugs, and price bidding may impact pharma companies who in any case are facing a lot of competitive pressures. How would you view some of the pharmaceutical names? Any buys there?
Well, I think the US generic space has always been a very competitive space. It's not been easy to be there and compete. So the competition has always been there. It's not been anything new. Probably what we've already incrementally seen is probably there is somewhat accelerated price erosion that's happening in the generic business over the last few quarters, and at the same time there is a channel consolidation which is playing out in the US distribution space, and as a result the generics companies are getting impacted on both sides, on one side on the pricing side and on the second side with a stronger bargaining power which the distributors are having. But having said that, I still think the outlook for Indian healthcare industry remains very promising from a medium-term perspective, because Indian companies are moving up the value chain from being plain vanilla generics company to specialty and complex generics. And while these companies are Indian companies, but their businesses are truly global, and probably we have created some of the finest global healthcare companies out of India. Clearly, I don't see, meaning I think there's every possibility that probably we'll have the largest global generics company out of India in the next 3 to 5 years. And some of those Indian companies are already making the kind of investments which will take them to that kind of size and scale. So I think the medium term to longer term outlook for healthcare remains very promising. Over the next few quarters, probably next 2 to 4 quarters, some of these companies might still have some headwinds because of generic price erosion. But I think any decline in stock prices during this period should be used as an opportunity for a longer term investors to invest into those businesses.
Are there any themes or names where you think a large re-rating is on the anvil? Maybe telecom, if consolidation takes place, auto components, tires, anything that where you see a large re-rating that is due?
Sorry. I'm pretty constructive on the telecom as a sector, because I think we are in the last leg of the competitive intensity of the sector. Probably at some point of time this will abate, and what we'll essentially have now is a sector which is far more consolidated with about 4 odd players, and all the headwinds that the sector has faced over the last 7-8 years in terms of regulatory changes, in terms of spectrum auctions, are all clearly behind us. If India has to emerge, as one of the faster growing economies, and a shift has to happen towards the digital economy, then I think all of that will ride on back of the telcos, because they essentially provide you the connectivity. So I think clearly we're reaching a stage where we are towards the end of the competitive intensity and the regulatory hurdles as far as the telecom sector is concerned. And if one were to take a slightly more longer term view, that is over the next 3 to 5 years, I think the outlook for the sector is promising. So for me, it's a sector that one should certainly look for, invest into.
Right. Say if the consolidation happens, and again, not taking names of any other company, but if the consolidation happens and number 2 and 3 come together and they become number 1, you think industry dynamics can change quite meaningfully?
See, I think they've already changed, because today in terms of pricing, probably India has the lowest global pricing that exists anywhere in the world. All these companies have already made significant investments, one into the spectrum, which will last them for the next 20 years. They have and they are making investments into the networks on the ground. Barring the top 3 or 4 players, everyone is bleeding, and bankers are not willing to fund any of these companies. So I think the sector has reached a stage where barring the top 3 companies, everyone else is on the brink kind of thing, and things can't deteriorate from here. So I think the dynamics have changed, and they've changed significantly. From here on, as growth recovers into the sector, which it will, I think, over the next few years and over the longer term, I think the top 3 or 4 guys will certainly do well.
Right. Just about the rates and the tariff rates of telecom companies. Now, tariff rates of telecom companies have always been going down since inception. Right now, as you said, that it's one of the lowest. Say from 30 paisa, if a company increases and makes it about 45 paisa or 1 rupee, whenever the pricing power comes back, should it be looked as a 50% hike, which can change the EBITDA estimates quite meaningfully? Or you would still say that, from 15 rupees, we are still just at about 45 paisa or 1 rupee?
So I think, these companies are very smart enough in terms of how they run their business. So what eventually will happen is you will not see a significant uptick in the headline pricing, which these companies report. But at the same time, what matters to these companies is the ARPUs, as they call it, or the average revenue per user. But they have various other means and ways of taking more money out of customers' wallet, and we've seen the same thing when the inflection point happened in the voice business, that while headline tariff rates declined, but the average revenue per user kept on rising because consumers were using more and more of it, and these companies were clocking sharp revenue growth. So I think something similar will happen as the data story unfolds. So headline tariff might still not go up very sharply, but yet these companies know how to take more money out of the consumer wallet, and as a result their average revenue per user will keep going up, and that is what matters to them, the absolute dollar amount rather than the rate.
Right. So that was a view on telecom. Just a word on the metals and cement pack as well. These are sectors which have done very well. However, most of the outlook going into 2016 was that these sectors may not do well. Let's start with metals first. For 2017, again, positive on metals?
So I think that's one which has clearly surprised everyone, or most of the people globally, because the large part of the rally is not driven by actual uptick in demand globally, but more one, because of the reflation trade that's emerging globally because of the new Trump policy or expected Trump policy, and secondly because of closure of capacities in China. So while demand uptick still has been muted, the drivers of the uptick in the metal prices has been more driven by some of these policy statements. We clearly need to see through as to whether China really follows through in terms of closing capacities, and whether the new president in US makes the kind of infrastructure investments he's really talking about, and whether that drives demand. So I think for the time being, outlooks remain good, but I think it will be subjected to a lot of volatility.
Right. So that was for the metal packs. And for the cement pack, are you surprised by the valuations that Street is giving into Ultratech or some of the other large cap players?
Yeah, I would think, because some of these names are actually trading at valuations which are rich, so they are pricing in very strong growth expectations. And I certainly think that as growth recovers in the Indian economy, these companies will be beneficiaries of uptick in the volume growth, but yet I think the valuations are pricing in a lot of those potential upsides.
But for cement, do you think it's a better play on infrastructure rather than the core cap goods company? That's why that valuation difference, because over a period of time people have realized to play infra, it's better to own a Ultratech rather than a L&T?
Yeah, that's been the case over the last few years, but I think as we see an uptick in the economy and we see recovery in the growth in the economy, I think some of these engineering companies have very strong businesses, and I think they'll do well.
Right. Within the infra, Pankaj, could you just be a little more specific? There are a lot of sectors, people can look at defense, roads, ports. Can you just be a little specific in which sectors within infra do you think the pickup will happen first?
So roads has been doing exceedingly well over the last 2 or 3 years and probably should continue to do well. On the other infra segments, we haven't seen a meaningful uptick in the last few years. Essentially ports or in terms of we haven't seen any new greenfield project announcements, so the core capex, private sector capex has been elusive. But I think as we see a recovery in the growth over the next 2 or 3 years in India, and that's primarily also because that we have some excess capacity in some of these sectors. As the growth recovers in the economy and we close the output gap in the economy, I see no reason why investment should not pick up in the economy, but that's probably a couple of years away. But as that happens, I think the cap goods companies or the engineering companies should also do well. As far as defense is concerned, I think while there have been a lot of initiatives which the government has taken at the policy level, but it is yet to translate into meaningful business to companies. So I think while longer term, probably it's a great opportunity and for the private sector in India, but I think probably it's still some time away before we start seeing the policy actions translates into orders for Indian companies.
Pankaj, thank you so much for taking out time for us. Always good to get a perspective from you. Thank you so much.
Thank you.